Today, we will talk about credit and debt, and we are excited to have Ms. Kathleen Titsworth with us again to give us a great part two of this series. So I will just take the time to introduce Ms. Kathleen Titsworth again, and we will get started with our program today. Thank you all for being here. So Kathleen Titsworth is the outreach coordinator for the Connecticut Department of Banking. She manages the agency's educational outreach program by planning financial and investor education programs and organizing agency conferences and events. She handles agency communications, produces annual agency reports, and quarterly employee newsletters, responds to media requests, and oversees the agency's website. Kathleen spends much of her time presenting to groups in the community or representing the department at events to promote the agency's mission of protecting consumers. She is on the steering committee of the Coalition for Elder Justice in Connecticut, serves on the board of Connecticut Jumpstart Coalition, and represents the Department of the Military Community Coalition and the Connecticut Safes campaign. We are excited to have Ms. Kathleen Titsworth back with us today. So join me in welcoming Ms. Titsworth. Thank you so much for your time today.
Thanks so much, Charisse, and I'm really glad to be here again. The first session, we talked about banking. We talked about different types of banking, from traditional all the way to online, and the peer-to-peer type services. We got into digital and everything. So today our focus is going to be more on credit and debt, which kind of goes hand in hand with that when we're thinking about managing our finances. So I'm going to go right into sharing my screen. And let's see, we're gonna go right into this slideshow. There we go. Okay, and I'm also going to do a quick little minimize of the speakers here. So wonderful. So here's our program all about credit is what we're going to talk about today. So I like to start out with kind of just sort of sharing some general information with all of you, and being students and looking hopefully towards college in the future. There was a recent survey of college students, and nearly 1/3 of them admitted they weren't really very well prepared to manage their money on their own. We in our homes, or maybe we have jobs or things like that, and we do a little spending, or but we always have someone to rely on. Once you're off to college, that's where that real independence starts. And it's when you find out just how difficult it could be to really manage your money. So to get that really good understanding prior to then is really important. According to this survey, only 1 in 5 felt very well prepared to manage their money. And about 75% admit, I've made some mistakes with my money. One of these biggest mistakes, one of the 3 biggest mistakes, was actually putting too much on a credit card. And that's something we all do. It's almost something that kind of goes with experience with having the credit card, but you cannot be educating yourself and learning as much as you can about them beforehand. So I'm going to go over exactly what credit cards are, kind of the difference between a credit card and a debit card and everything. But one question a lot of us don't really think about is, why is it important? Why do I really need a credit card? Maybe I'm better off just using my phone. I have it hooked up to a digital. I was going to say maybe it's good just to have cash, but many of us don't carry cash with us, and it's not, unless we have that debit card, it's not always easy to get cash from an ATM or at the bank. But these days, as I talked about in the last session, with a lot of the virtual payment opportunities, I know people that they just never carry cash. They just always have it on here. There's pros and cons to that we won't get into today. But I want to focus on credit and why it is important to establish credit, and why at some point, if you don't have any type of a credit card or a loan or anything, um, you may in the future maybe regret that if you don't. So I want to make it, I want to make you understand why you might want to have a credit card and the proper way to use it. So why do we want to establish credit? Well, eventually one day when you're out of college, or if you go into work right after college and you want to move out of the house with mom and dad, if you want to rent an apartment, the landlord wants to make sure you're going to pay every month. And how will he make sure? Well, he can look back on your previous credit history of having a loan or a credit card and paying that back. Being approved for other loans or credit cards. Let's say you're ready to get a car. And again, you're off on your own. And maybe at first you're living somewhere where you can walk to work and it's convenient, or maybe you're on a bus line, or even maybe you're taking the train into New York. But at some point, maybe you'll want a car, or maybe you want a small loan to help pay for some furniture for your apartment, or a new computer, things like that. You'll need to have shown that you have a credit history. Sometimes getting a job, getting your own phone plan. Again, there's something to be said for being home, being able to be part of a family plan and everything like that. But at some point, in your 20s, that's all going to stop. And you want to have that independence, and you want to be able to show that you've had that credit history. And I'm going to talk about a little bit more about that as well. So basically, using credit is borrowing money. You're borrowing money in order to purchase something. Okay. So with a credit card, you use your credit card, you pay for something, and a credit card is always hooked up with a financial institution. To put it simply, we'll just say a bank. So if you look on your credit card, or if you look on your parents' credit card, we're used to seeing Visa or MasterCard, but there's always a bank. It could be, a local, it could be Webster Bank or Bank of America, or it could be something like Chase, or a larger institution like that. But that institution, that bank actually is paying the store for your purchase. So you've borrowed that money. So that bank is going to send you a bill. That bill is either going to come in the mail, or it's going to come online, however you have it set up. And there will also be charges, because that bank needs to make money. They're a business and it's their way of making money. So the additional charges may be a fee, there may be an annual fee, or there may be interest, which we'll talk about in a moment as well. And then you pay it back. So that's sort of the circle of how it works. It's you don't have the money in front of you, so you pay with a credit card, you're lent the money, you're sent a bill, and you pay the bill back. And as you do that over time, you're establishing this credit history. And this is showing future people, hey, this person has shown that they can pay off a loan, money that is borrowed. Real important. So, and we have credit cards and we have debit cards. And I kind of want to just quickly talk about the difference between the two of them. As I mentioned, they both carry logos of a major credit card company. Visa or MasterCard are the two major ones. But there is a difference between the two. And I'd be curious, I don't know if you're using the chat or not, but I'd be curious if anyone knows the difference, or wants to share what they know about the difference between a credit card and a debit card. They're very similar. They look very similar, but there's a big difference. Okay. The credit card, as I say here, pretty much is a loan. You're borrowing, as I mentioned earlier, you're borrowing money and you have to pay that back at a later date. Now there's limits. So depending on the credit history you've shown, students, when you initially get a credit card, it's going to have a loan, a small amount. You're likely not going to be able to purchase something for $10,000 on a credit card. Very unlikely. People who've established credit for a while, or depending on, if it's used for a business or things like that, might have larger amounts. But there's limits on these amounts, and we call them charges. So when you use a credit card, you're charging something, but essentially you're borrowing. Now, if you don't pay your bill in time, or in the full amount when it is due, there will be additional charges. And this is where interest rates come in. So I'm going to also, I have a nice slide and a couple of slides that's going to show you a little bit about this, but that also, how good your credit is will also determine the type of interest. So for instance, if you have a high interest rate and you don't pay a card off in time, they're going to charge you more than if your interest rate is lower. Again, it's easier when the information is on the screen. And also too, um, perhaps you charge something like an iPad for $400 or $500, and your bill comes in the next month and you don't have all that to pay it, but you can pay part of it. So let's say you pay 100 towards it, and then the next month you pay another 100. Well, each time you don't pay in full, there's additional charges as well. Remember, like I said, that bank is a business and wants to make money. But when you think about it, if you've paid $400 for that over time with a fee, you may have ended up paying closer to 500. So that's something to think about when you're putting things on a credit card. As I mentioned, sometimes there's an annual fee, sometimes it's a $50 fee or so just to be able to use that credit card. But the important thing is that last bullet. Credit cards help you build credit. As I said, you are showing over time that you can borrow money and pay it back. And there's a history, and in the future, people can look at this history. I'm going to talk about that as well. Now, a debit card is different in the sense that a debit card is linked directly to your bank. You have to have a bank account in order to get a debit card. And if you notice, see, it looks very similar. There's our credit card, there's our debit card. They look very similar except for the word debit on it. And that shows that when you make that purchase, the money nearly instantaneously now with electronic transactions, it's coming directly out of your account. It may be a checking account or a savings account, but it needs to be linked up to that account, and there has to be money in that account. So if there's $200 in that account, you cannot use a debit card to make that $400 purchase. It's not going to go through. So there needs to be money attached. What's nice about that is it sort of controls your spending. So if you're looking at from a budgeting perspective, a debit card is nice because it only allows you to pay what you have there. As I say here, it's basically a cash purchase, right? If there's not money there, you won't be able to make the purchase. However, if you see my last bullet there, a debit card does not help you build credit. Because are you really borrowing the money from the bank? No, you're really, in essence, you're not even borrowing it. You're taking it right from your account. So they're very different. They look the same. They sit in your wallet and they may look the same, but remember that if you have one of each, when you're looking at establishing credit, the credit card is really the one to go by. Okay? Now, just general tips I always like to share in using a credit card. Before you make any purchase, always make sure you can afford it. This is probably basic budgeting 101, is make sure you can afford it. Even if it's something you think it's going to take time, like I mentioned, that iPad, if you know you have 6 months and you know you need this, we always say separate a need versus a want. If this is something you need, let's say it's a Chromebook, or let's say it's a new laptop that you need for school, something. Maybe it's even from your parents' perspective, maybe it's even a pair of glasses that you need and you just don't have all of the cash for it right now in that account. If you know you have that plan of, okay, it costs $500, but over the course of this many months, I know I can pay it back. You can afford that purchase by using a credit card. You do want to pay off as much as you can. As I said, you borrow that money, and I wouldn't say you have a limitless amount of time to pay for it, but literally there's a minimum amount that they ask that you pay every month. Usually it's around like the $30 range, and you can literally just pay the minimum, but there'll be more fees attached to that. So you want to pay off as much as you can, and you want to pay on time. One of the biggest things people do that hurt their credit is they make late payments. And, sure, the payment's still going and it's still going to get there. But when you pay on time, it increases your credit value so much more because you are showing this is due on the 15th. I've made my promise to pay on the 15th and I've done it. Keep within your limit. Now, as I mentioned, with a debit card, you're forced to stay within that limit. With a credit card, it could be possible that you charge beyond the limit. And that's where you get into a little bit of trouble with that, because in the transaction, there may be some issues with the transaction and then paying it back. Okay. And I put on here avoid cash advances. This is something, I'll be honest, I have never used with a credit card. A lot of credit cards offer that. Kind of instead of just using it to make a purchase, they offer sort of that advance in the form of cash. And I just like to say, just avoid that, because I feel like that's an easy way to get into debt. And when you're in debt, you owe more than you can afford to pay back. And that's not a good thing. So here's the screen that I had spoken about, where I want to show you this example of you have a credit card balance, and this is a little bit high for a credit card balance. I think hopefully this is more than you would see with anything that you'd be spending in the near future. But let's just say this person has a credit card balance of $2,123.77. My guess is they've made purchases over several months of different things, maybe the holidays, maybe they purchased something big. And they've gotten themselves in a situation where they have a high credit card balance. Now, in this case, their minimum payment due is $40. So let's just say every month on the 15th, their credit card statement comes in and they have to pay minimum of $40 towards that balance. Okay, so if we look at the chart, we have options 1 and 2 here. And if in the first column, if you make no additional charges, so these are the charges, and you're putting that credit card in your drawer and you're not going to touch it now until you pay it off. You make no more charges, and each month, option 1, you only pay the minimum. So you're only going to pay $40 each month. You're going to pay it on time, which is good, but you're only going to pay that minimum. It will take about 5 years to pay that full balance off. And the total, if you look in that last column, is over $5,300. Now, those purchases, you only paid $2,123 for whatever all those purchases are. In the end, 5 years later, you'll have paid out $5,383. That's a lot of money because you only paid the minimum. Now let's see if somebody, option 2, if they pay $150. So they've sort of worked it out where they know they've got their job, and with all their other bills due, they know they're like, okay, I'm gonna sacrifice my daily Coke from the vending machine or a Dunkin' Donuts that I get, and I'm gonna see if I can eat out less and things like that, and I'm gonna pay $150 a month. It'll take about 3 years, and it'll be about $1,100 less. It'll cost about $4,000, but still, you are still paying double what you charged by paying $150 a month. So this is why, for several reasons, shows the several reasons why you don't want to charge more than you can afford to pay back. Even though this person kind of had this long-term plan, 3 years is a long time to pay back a credit card balance. So you want to just charge what you know you have that schedule of paying back. You don't want to just pay the minimum. It's not worth it because you end up paying so much more. And even $150 is a pretty good amount to pay back, but that's a high credit card balance to have. And it just takes too long to pay it back. So it's something you want to keep in mind when charging with a credit card. So you might be asking yourself, oh, this seems really difficult. I don't know that I want a credit card. It's too tempting to maybe charge too much. What can I do to manage my money? I'm not really sure about this. Well, the big thing to do is save. We stress it so much when it comes to any type of discussions about our finances. If you get that part-time job, or if it's your birthday, or if it's holiday. We just had an Easter weekend the other day. My young sons, a few of the eggs might have had some change in there and some dollars right into the piggy bank. Same with you. Whenever you get money for special occasions or certainly for your job, you want to make a habit of saving it. I know it's tempting to, you wanted that new pair of sneakers and, so maybe you're budgeting for that then. Maybe you've been saving to get yourself that, and that's a goal. But what I always say is pay yourself first. And pay yourself means put that money into savings, whether it's your wallet initially, just to kind of keep it safe. But you really should be thinking about having a bank account if you don't already have one. Your parents, very likely, or relatives that are likely using a bank or a credit union to be putting their money in. And they may still call it a bank and it may be a credit union. A lot of times it's teachers. Teachers have a credit union. I work for the state Department of Banking. There's a credit union for state employees. Lots of different organizations. I know hospitals, a lot of hospitals have their own credit union, and it's very convenient. So a bank or credit union, you open that account, and it's a nice, easy way. In fact, with your job, you can even arrange for your paycheck to be deposited directly into that account. And some people think, oh, I want to get my hands on that money. But really, why? If it's safer in the bank and it directly goes into that, and then you just take out what you need, believe it or not, it's an incredible way of saving because before you know it, that money has grown. There's usually a little bit of an interest rate in the bank. And by that, it just means they pay you a little bit extra. So over the month, you get a little bit more added onto it. So that's what we say. Put some of that money from your paycheck right in there. Um, Develop a budget. Budget is basically writing down what money you get, your income, and then your expenses, where you have to pay. Are you helping to pay any of the family bills? Do you have your own phone and maybe your parents are having you help pay some of the charges on it? Do you pay your own gas money for driving? Things like that. Put those down as expenses. Do you buy your lunch in school? Or maybe on the weekend, every now and then go out with friends and things. If you write down what you spend and then compare it to what you're getting in, it's a great way to see, all right, I'm doing pretty good here. I'm not spending too much. Or, you know what? I'm spending a little bit more than I'm taking in. And I've really been trying to save for those sneakers or really trying to save for that new iPad. It helps to have it in writing. Some people like to use pen and paper, but as I'm showing you here an example, there are apps. You can just check out some apps. Um, I always Google to see, I don't just look at the reviews on the apps, to be honest. You can Google and you can look up and see what you think of how they're working. Maybe some apps for a certain, group of people may not work for you. Maybe you want to see what works well for people around your age. And the key is not to spend more than you have or rely too much on those credit cards. Like I said, you don't want to end up with several $1,000s on a credit card that's going to take you years to pay off because trust me, it doesn't go away. I just saw a commercial on, I don't know what I was watching the other night, and a commercial popped up, and this person was promising to get rid of your debt. If you have all this money in debt, that will work with your company and get rid of it. Companies like that just want to charge you. They want to take your money and say that they'll pay back your creditors or negotiate to have your debt wiped away. Let me just tell you, whatever you charge on a credit card, you've got to pay back. You owe. You bought something, you've got to pay it back. It's as simple as that. And just remember that. All right, so I just wanted to stop here. And again, I want to encourage you to use the chat box. I have a little fun fact that I thought would be a nice way to just sort of stop the flow of the program for a moment and just throw some trivia out there. So I don't know if any of you knew this, but in 2020, last year, there was a bit of a coin shortage. I had read up on this, and in fact, I forget where I was, and they had posted a sign and said, in need of change. So if you had the change to give, they wanted you to provide the change, not necessarily the dollars, but they were looking for the coins. So the US Mint decided we didn't need more. So the US Mint stopped producing. B, coronavirus or COVID-19. Or C, everyone has jars and buckets of coins that they are hoarding in their homes. So I'd be curious in the chat what people are thinking, and I'll give just a few seconds. Let's see if I can see the chat here. I see somebody guessed B, somebody guessed coronavirus. We have a few. And actually the answer, oh, let's see what else we've got here. Yep. The correct answer is all of the above. The US Mint actually, partially because of employees, less employees coming in and being able to um, to produce the coins, but the US Mint actually reduced their production. Obviously, because of COVID-19, people weren't out there spending their money, and that goes into C as well. So they were just keeping their coins, and a lot of people collect their coins. That's something that happens all the time. So it was all of the above. So anyone that guessed that it was all of them, you were correct. All right. So we've talked about credit. We've talked about establishing credit. So you get a credit card, or let's even, and I didn't even mention, and I want to mention now, a student loan. When you decide where you want to go and you work on your financial aid packets and things like that, when you get a student loan, that's credit. And once you don't even have to look at it until you graduate. But once college is over and those student loan bills start coming in, again, you want to start paying on time, just like with the credit card, because over time, you are going to show that you have a good credit history. So now I'm telling you, well, I have a credit history. Where do I see it? Well, this is where you go. It's annualcreditreport.com. And everybody is able to get a free copy of our credit report once a year. And there's 3 credit reporting bureaus: Equifax, Experian, and TransUnion. And I always want to tell people, you can go to their individual websites, but they may charge you. Annualcreditreport.com, this website, is where you can go to get copies of your reports for free. And actually, because of the pandemic, about a year ago, they announced that rather than just getting 1 copy a year, you can get 1 copy every week, because there have been a lot of federal government opportunities for people to get help from the government on their mortgage. There's been assistance in regard to mortgage. Student loan payments have been stopped during the pandemic. So a lot of people are a little concerned about their credit, so they're able to check it once a week. And that has continued now until 2020. In general, it's once a year. So that's why I put it like that right now. But annualcreditreport.com, this is the website. And when we're all finished, if we have time, I can actually go to the website and we can check out some of these great links up here. All about credit reports is wonderful. And it tells you what to look for. Well, actually right here, what to look for. All about credit reports tells you what is in your credit report. And you could see how to request it, what to look for. There's even information here on protecting your identity from identity theft. Because if somebody gets a hold of your social security number or identifying information, or like your bank account number, things like that, they can apply for credit potentially and start spending money in your name. So this site is so wonderful because it really has a lot of great information if you want to kind of sit and do some research. But this is the website. You can request a copy of your credit report. And well, what is in the report? What really is a credit report? So a credit report basically lists your credit history. So it will list any credit cards you've had. Even if you had a card and decided you didn't like it and didn't want to keep using it, you called the company and you canceled it, you put it through a shredder, you tore it up, but you had it for, say, 2 years, several years ago, it will be on your credit report because you still established that history. Now, I want to point out as well, besides the traditional credit cards, you could go to a store, Target, LL Bean, Kohl's, almost any store offers their own credit card. Now they still have to be attached with a bank. They're still attached, with a financial institution, but it's the type of credit card that you can only use in that establishment. And a lot of times, there's offers like I know people have the Target one and they kind of earn points, and a lot of credit cards offer that, as part of their marketing. But the bottom line is any of those type of cards are also considered like a type of credit card and would show up on your credit report. So as I say here, a list of businesses that have given you credit or loans. It could be, like I said, Webster Bank, Chase Bank, Capital One. It could be Target or LL Bean or Kohl's. And it'll show those names. It'll give the amount that your loan was or your credit limit, and then how often you paid on time. And it will literally even show the amount you've paid. So you go into your credit report, and for instance, I have a Macy's card, and I can go back and see, and it's usually green, green, green. Oh, red. Yep, that was the month I was late. They remember, like I said, it doesn't, we kind of can't hide from our credit is one important thing we want to know about. But if we've made a late payment, it shows. One or two, a couple of late payments, it's not a big deal, especially if your habit is to pay on time. But if it's all red and it's showing that you're late all the time, they're really going to ding you for that, and it's going to hurt your credit. If there's missed payments, and it says here as well as bad debts. So just if there's something you just walked away from and stopped paying off, well, like I said, it never really goes away because at some point that institution, that business is going to sell it off to a debt collector. And this is when the phone calls start in your in your home. And there are certain rules and there's protections for you with a debt collector. I'm really not going to get into that too much, but it's definitely not something you want to experience because it really hurts your credit. And will hurt what it will affect negatively how people see you as someone that's going to be able to pay something off. And if you found your dream apartment that you and your friends all want to, let's say your senior year of college, you're going to rent an apartment and you're all going to do this together, and they run your credit and your three friends, great, they're good to go, and it comes to you and you had that credit card that you just let go, or that you were late all the time and your credit's bad, that landlord may not want to rent to you. So it really is something that it's hard to think about now, but it's what we do now will affect, what we want to do in the future. Now, a credit report might also include things like if businesses that have checked your report. So let's say you were looking for a car, or let's say just for fun, you were looking at cars and you wanted to know what it was going to cost you. So you had them run your credit. So you went through a bunch of places and they ran your credit a lot. It will show up on your report that they've checked your report. Different jobs you've had, it may show employers, may or may not. I don't know that I've necessarily seen that on mine, but your current and former names. So for me, I got married. So my maiden name was Doolin. So that will show up on my credit report as well as my current name. Any type of even maybe nicknames. If you get a magazine subscription and if your name is John and it comes to Jack or something like that, or it just comes to your initials, those are all in your credit report, as well as different addresses you may have lived at. And certainly any types of the bankruptcies or public record information, if something has gone into collection, it's all on your credit report. So when you read it, I tell people the first thing you want to do is look at your personal information. Make sure that's you. If there is, if you're, John T. Smith, and there's something there that says John A. Smith, that's not you. Or maybe you're John Thomas Smith and it says John Timothy Smith, that's not you. So remember, these are the credit histories of everybody. So it's easy to get mixed up, especially with maybe junior or senior. Maybe you're John T. Smith Jr. and it says senior. Well, guess what? That's going to have your father's information on it. You want to verify all of that, your date of birth, your social security, the addresses. If any of that is incorrect, there's a way that you can notify the credit reporting bureaus and get that taken care of. The big section is your credit history. You want to check those accounts. You want to check those balances. If there's a credit card and it's all in the red and you say, wait a minute, I have proof. I can go back. I can log back in there and show I paid on time every month. Again, somehow it could have gotten mixed up with another person's credit history, or there was just a mistake on their part, and you can get that all cleaned up. The public records section, again, you can check. And then we say these inquiries is this is where people were checking your credit history that you want to look at as well. Now, when it comes to our credit reports, I'm always most interested in the details and the content of it and what's in there, because if anything is incorrect, you can change that and just make sure everything is on the up and up. Most people seem to like their score. They want to know what their score is. And you may have heard of something called a FICO score. And it's basically, and I believe it's FICO.com that you can go to, and this is where I got some of this information on. But they basically develop their metrics and how they put all of your information together in your credit history of paying on time and how much credit you have and how much you've paid and everything. And they come up with a score. So the 100% is based on all these things, the amount you've owed, your payment history, the credit mix, the length, and the new credit. And here's a little easier way of seeing it. So your credit history, your payment history, which is the biggest percent, which is 35% of your score, it's basically, have you paid them on time? Have you paid these and been on time with your payment history? So paying your credit card or any of these loans on time is so, so, so important. The second most important is the amounts owed. It's 30% of your score, and it's the amount that you're using. So, how much credit you have available. You may not want to have too much available, but if it's there and you're using it and you're paying it off, that's a good thing. So, I guess in short, you don't want to have too many cards that are maybe there and you're not using them, right? It's just sort of there's a lot of credit out there that they see as potentially they can put all this person can put all of this on credit. So we kind of want to, I'm not sure how that's going to affect their score a bit. The length of your credit history, how long have you had it? If you just got a credit card today and have used it for about 2 months and then you want to go rent an apartment, it's not a long time. So your score is still not going to be that great. But if you've had a credit card for a year or two, you've paid every month, and you, you go to rent that apartment in a couple of years, hey, that this person's got some pretty good credit and the score is going to show it. All right. New credit, how often you are opening new cards. Every time you go into a store, I got to tell you, the salespeople are really good. I was just shopping over the weekend, and especially when you make a large purchase, let's say back to school shopping or things like that, or say those sneakers that are a pretty good amount, and you get up to the cashier, and they say, if you take out a credit card, you could save 25%. That's $45 off this. You're thinking, wow, it's tempting, but you don't need a credit card for every store you shop at. You just don't. If something like, you may talk to your parents and, why do you have a Target card or why do you have this card? Well, it could be stores that you shop at frequently. And at some point, again, it may be useful, but certainly not. You don't want to walk into that mall and get a credit card from every store in the mall. And it's not worth it because it'll affect your score. And then the mix, they like to see what type of mix you have. Not just credit, but maybe, like I said, a student loan, a car loan, things like that. All right. So, okay, the website, I just want to clarify, it's FICOscore.com is to look up some more information on your FICO score. FICOscore.com. I knew I had the website here. So, building your credit responsibly is really simple, but it could be hard to do. I don't want to oversimplify it, but it is very simple if you just remember these things. Pay your bills on time. Keep your balances low on those credit cards. You don't want to overcharge. Remember that chart I showed you. You don't want it to take you years and years to pay them off. And don't close unused credit cards necessarily. The longer your credit history, the better. So, if you have a few and you find yourself using one more than another, it's okay. Hold on to it and maybe once a year use it just to keep that history there. Now, if you find yourself with a dozen cards, that's a different story. We may want to cut those down a little bit, but for the most part, a credit history, the length of having good credit is important. All right. Now, I didn't talk too much about these interest rates, but when you're shopping for, like, the best example is for a car. or, with your parents when they're looking for a mortgage, or when you guys are shopping for student loans, if you're doing it during a short period of time, it's not going to really have too much an effect on your credit report. And it's one of if, however, and my example of just sort of for fun going to look at cars, if once a month you do that and every time you go they run your credit history, it's it's not going to be good for your credit score. Okay, so you don't want you can, if you can go and check out a car and if they need to run your credit in order for you to test drive it, then you don't want to do that. Okay, it's really something that does directly go to your credit report. Just manage your credit responsibly. Like I said, don't charge more than you can afford to pay. We say monitor those credit reports. Um, it's your financial information, it's your lending history. So take a look at it. The biggest thing, like I said, make sure everything is correct on it. And you definitely want to avoid having the payments go to collection. Okay. These bills aren't going to go away. I can't stress that enough. All right. And then the other thing also is protecting yourself. I always want to include this because it's so, so important. I feel like when it comes to our financial well being, it's one thing to be really good at budgeting and I understand credit and I'm not going to be, too careless with it. But the one thing we always need to keep in the back of our mind is to keep our money safe and to keep our financial information and our personal information, our social security number, safe. Phone calls from strangers, it's the easiest way that scam artists reach people and get them to give up their information is if they pretend they're your bank or credit union on the phone, or they pretend they're your credit card company and that there was an issue with the last charge you made, or that your payment wasn't received and they'll take it right now if you just give your bank account number. Never. You never, ever, ever want to trust who's on the other end of that phone. It's as simple as that. I get calls to this. I don't know about you guys with your cell phones all the time. The best thing to do is ignore them because if you notice, they don't leave messages. Or if they leave a message talking about a car warranty or that you won a trip or something like that, it's definitely a scam. Beyond the phone calls, emails. I should include texts. I got a text recently that I actually use in one of my presentations about cybersecurity, and it said that I won $1,000 Amazon gift card, and I was really excited at first, and I realized it was a scam because why would anyone have my cell phone number, not identifying who they are? I certainly didn't, put my name into a raffle or anything like that. And what these do is they make you click on a link, and it will likely infect your device, or it'll bring you to a page that looks like it's legitimate, but it's not. So you want to be very leery of these phone calls, these texts, these emails. We never want to wire money to strangers. You're thinking, why would I wire money? Well, when they get your guard down and they think you've either won something and you have to wire money, or they do this a lot to older people. They make them concerned that there's something called a grandparent scam, that something is wrong with a family member. And so out of fear, they wire money. Just something to think about. Something I want to share. I always say monitor your bank and credit card statements. It's so easy to by securely and safely joining online and checking. You can check every day if you wanted to. Just make sure a transaction you made went through and that there's nothing on there that you didn't charge. And as I say, check your credit reports. Okay, I have another fun fact for all of you. So I didn't really introduce myself too much at the beginning because Charisse did such a wonderful job, but I'm with the Connecticut Department of Banking. We regulate banks and credit unions, the mortgage industry, and investment professionals as well. So we're more than just banks and credit unions, but our boss is our banking commissioner, and he's appointed by the governor. So I'm curious if any of you want to guess when our first female banking commissioner served. A, 1940, B, 1968, or C, 1984. Anyone wants to take a guess? Oh, okay, I see a question in the chat that I will definitely address. Okay, we have 1968. Any other guesses? Anyone want to guess when our first female banking commissioner served? 1984. You're going to be surprised when I give you the answer. We have never had a female banking commissioner. I am sorry to say, we have a wall that has all of our former commissioners' pictures on there, and we have yet to have a female banking commissioner. So hopefully, we love our commissioner. Commissioner Perez is great. He's been our commissioner, I think, since about 2015, so about 6 years now, and he's great. But hopefully in the future, we'll have a female banking commissioner as well. So here is our information. We have a website, ct.gov/DOB, and also a Facebook page where we have some great consumer information. I do want to look, oh, let me see if I can go back. Let me leave that up there, but I would like to, if I can, see that chat question again. There we go. While keeping this information up. Let's see. Let me see if I can move this over and out of the way. Okay, so the question is, I have about 5 credit cards with no balance. I want to close them, but I'm afraid to close them. The one I want to keep open is 16 years old. Absolutely. You were paying attention to me today. Keep open the oldest one for sure. I would suggest, and I'm really generalizing because I don't know the information about the types of credit cards. I would maybe separate them into store credit cards, like I mentioned, the LL Bean, Kohl's, Macy's, Target, cards like that, and like gas cards and things like, well, versus the sort of major credit cards. You've got, like the Discover card, the Capital One, one from like a Webster Bank, the financial institutions. Separate them out. I would first look at the store cards and determine what you need and don't need. The stores that you frequent, I would keep. The stores maybe you only use once or twice a year. It really depends, because if they're worth it to you because you get discounts for using them, like I said, I don't want to generalize too much. But then when we look at the major ones, absolutely keep the oldest. Maybe your newest, especially if you've only had it within the last year or so. Some people get new cards because a lot of times you're offered a zero balance. So you get a new card, move everything onto that card and pay it off. That's a card maybe you don't want to keep because you've just had it for a temporary amount of time. But definitely that card you've had for 16 years, hold on to that. And you know what? They have no balance. That's great. I'm not sure if it means that you use it and pay it all off, which is perfect, or if you just have them and don't use them. I might suggest using it once or twice a year, just to, even if you have the cash to pay for something, use the credit card and then pay it off, or maybe even take a month or two to pay it off, just to sort of show that payment history. All right, got a couple more questions here. Oh, what is the ideal number of credit cards to have? It's tough for me to answer. I hope what I just discussed with the last person with reducing the number, how many did they say they had? They had about 5. I got to be honest, 5 is not a bad amount. If they're all major credit cards, I think maybe that's too many. I don't know, maybe 2 to 3 major credit cards and then a few store cards in the mix. If you have a total between the two of them of, it's so hard for me to determine this because this is just my personal opinion, but certainly under 10, I think maybe if you find yourself more than 10 of all those things combined, might be something you want to think about. When is the best time to get a credit card? High school, college? Again, I would say if you have a job while you're in high school, so certainly high school, we're talking, junior, senior, not necessarily younger. It's not a bad idea because you can get used to it while you have someone in the house to help you, and you could talk with your parents about, maybe charging something and then figuring out that plan to pay it back. Or even if you don't have a part-time job, if you do, like I mentioned before, if you've got a bank account, and you're really starting to budget for yourself, you want to get prepared for college, it might not be a bad idea. um, College, a lot of people do get theirs while they're in college, just to be able to, maybe charge some things. Again, the key though is to be able to pay them back. Um, but I would say either. I don't know that there's necessarily a better. The key is though that you maybe have that support system to help you out with being able to pay them back, because it could be a little overwhelming at first. Okay. That oldest card is a standard credit card with an 8% APR, no store credit cards. Yeah, I would hold on to that one. You have them and don't use them. It's check your credit score. Check your if you're happy with your score, and if you're, it may be that, in this year it is kind of a strange year. I think a lot of people maybe aren't charging. Um, but certainly if you're doing any types of online purchases, ordering things, through Amazon or things like that, we always recommend maybe that you have one credit card that you use just for online purchases. You can kind of check on that a little bit easier. Oh, that's an excellent credit score. Don't listen to me. Do what you're doing. You're fine with your cards, and unless truly you have a card that you just don't want to have anymore and you want to call and cancel, otherwise just hold on to it. That's an excellent credit score. Does it hurt every time you check your credit score? Well, now score versus report. I want to make a big difference on. When you check your own score. So a lot of people they get their credit score every month with their credit card. I think Discover Card and some of them do offer that. So you're just getting it, so that's free. Um, as I mentioned, checking your reports are free. And you can really get a sense of that you have a good score just by looking at your credit history. If you know you pay everything on time, and even if you don't pay in full, if you know you're not really carrying a lot of credit and everything, you generally probably have a good score. If you want to check your credit score, I don't know that it hurts you to check your score. Um, it's when other it's and when this person is asking, does it hurt? I think they're asking if it negatively affects their credit score. That's only if you have other businesses checking your credit. Now, I mentioned this on a slide, and I might not have been very clear on it, but if you're shopping for a mortgage, the credit bureaus will know that, and they're not going to ding you negatively because you've shopped around in a week. You've checked out 4 or 5 different between banks and credit unions. You want to get the best mortgage you could get. They've all run your credit. It's not going to negatively impact you. Or same thing for like car shopping or checking on loans. If over the course of a year you have people checking maybe you're going to do a mortgage, but then you change your mind, and then 3 or 4 months later you do it again and you change your mind, and then in the meantime maybe you've applied for some store cards. Those are the ones that may have a little negative impact, but you always bounce back from that. Um, Credit Karma, I don't really talk about. I'll be honest with you. A lot of people like it. I can't really recommend it. Being with the State Department, I can't really recommend any type of program versus another. You do have to pay for that. And in my opinion, if you check your credit report regularly for free, you're not paying anything, and then you're also staying on top of it. Credit Karma is something where if somebody um, tries to use your credit without your knowledge, they'll let you know. And one of the things, again, I didn't go into in this program because it's sort of more of a fraud program, is things you can do to protect your credit report. There's something called a credit freeze, that if you're concerned about identity theft, or if you're concerned if you lost your purse or wallet, or if somehow there was a security breach, you got a phone call that there was a security breach with one of your the places where your personal history is, and you're concerned, you can freeze your credit. That means that anybody, including yourself, who wants to establish credit, like say you decide you want to go to a store and open, or you want to get a new credit card, you can't because your credit is frozen. but it's also preventing an identity thief from trying to access your credit. And you're thinking, well, if I freeze my own credit, then what? You have the ability to unfreeze it. So if you have your credit freezed, and to protect yourself, and to keep other people from checking or from applying for credit or things like that, and then you decide you want to refinance your house or you want to get a loan, now you're shopping for student loans, all you have to do is contact the credit bureaus and you can unfreeze it temporarily while you do that, and then you can put the freeze back on. There's also something called a alert, which is not as stringent as a freeze. It will alert you if somebody is checking your credit. So, some people feel better paying for something like Credit Karma. And bottom line, I say to people, if it helps you sleep, if it makes you feel more comfortable about your credit and your history, there's other types of credit protection companies, and I would say it's totally up to you. Do student loans count against your credit? I'm not really understanding the question. It's a loan, so it's a type of credit. So a student loan would be listed on your credit report, and it certainly would not count against you as long as you are paying it back on time and things like that. Like with any loan, if you don't pay it back or if you don't pay on time, there can be a negative impact. Shopping for student loans, same thing as with the mortgage or the auto loan. While you're shopping for a period of time, it will not negatively impact your score because you're looking into different loans. Let's see what else we have here. Those seem to be all the questions right now. I'm looking at the time. So again, my information is on the screen here. That's the phone number for the Department of Banking. We have great resources on our website, and on our Facebook page, probably several times a week. We update it with different types of information. So I'm going to stop my screen share and come back to all of you. And Charisse, I just want to thank you again for having me. And if there's any other questions that I haven't been able to address, and if people think of them later and want to submit them, Charisse knows where to reach me.
Yeah. Thank you so much. This has been such a great session. We really appreciate your time and you coming on to do a series, and we hope to do this again in the future. So thank you so much for everything. And that concludes our banking series for this year. So thank you.
Thank you. I'd love to come back. Keep in touch.
We'd love to have you. Thanks.